volatile markets is what we're looking at the moment. Yesterday, the number of job losses over in the US coming in way below what was expected. And there's, with that, so much emphasis being placed on tomorrow's job figures out of the US. To what extent exactly is positive market momentum hinging on tomorrow's job data?
Alicia, when one looks at the market, especially in the last week, they seem to be ignoring positive data and really focusing on negative numbers. So I think if those numbers come through worse than expected, we're going to see a correction, and probably worse than what we've seen in the last 2 days.
Well, certainly if those figures come in even better than expected, we've had some traders saying that these markets are due for a correction in any case. So how much of a correction are we looking at here? Could we be heading as low as March's lows?
I think March's lows would be very extreme. If anything, if we do see a correction coming down, I think it would come down at a slow pace, ticking up, but coming off. I think a 10% correction would be fair, and I think it would give investors an opportunity that they've been, those investors that have been waiting on the sidelines to really climb back into the market. So I think a nice, important level on S&P is 950. If it does, go through that level, we could see a trend change, or rather reversal. And obviously, in terms of our Aussie, 23,700.
Well, where we're seeing the selling pressure, some would say indicative of how people see the world. And in this regard, we've got financials really under pressure here. Is the uptick there what the markets are waiting for as a catalyst to spurring on some positive momentum?
Yes, if one looks at the pressure that the financials have come under, I've been quite bearish on banks in the short term, but quite positive for them in the long term, because we really see it as the eye of the storm in terms of financials, and they really need these 6 months to kind of recover and to come out of the cycle.
Looking at our own banking stocks on the local front, are they looking a bit expensive in your books?
Yes, I definitely see them expensive. In terms of where they're trading now, we're going to see them come under pressure. But I think, Standard Bank's notice yesterday really highlights that the banks know that they're under pressure and that they need to do something to increase their earnings in the next 6 months.
Of course, that doing something that you're referring to is loosening credit policies here. What have you made of that move exactly, and the impact you see this having on, most especially, economic growth moving forward?
I think it's quite positive for the consumers, and they really are targeting their consumers in terms coming ahead in terms of Christmas season. They really need those transaction volumes to come through in the next half of the year to carry them through. If you look at what it would do for our manufacturing sector, I think it would be quite positive. However, we'd really need a softer rand for our manufacturers in terms of exports, to increase our exports. But overall, I think it's very good for us, and it would help those who have been waiting to be able to buy a new car. Maybe those consumers in the street who would really like to buy houses. So I think overall positive for us.
On the financial services front, we did see Sanlam out with numbers this morning. How's the market reacted to those?
If one looks at the market, all our financial insurance stocks are down. So one really can't look at the market and see how the market has taken the results. On that note, however, the results were very good. They've increased their capital to 2.8 billion. They've really written new good business. And, in terms of their lapses on their policies, that's really been reduced compared to our other insurance companies. So really a good stock going forward. Obviously, we'll have to see how our GDP numbers in the next 6 to 8 months go through. but really a good solid stock.
Well, looking at the sector that's backing the trend today, it is the resources arm. And in that space, we've got gold miners really trading in tandem with the higher gold price we saw shooting through yesterday. How are you viewing gold mining stocks at the moment?
Quite positive for gold mining stocks. One looks at the gold stock, we see it as the anxiety index. When one looks at global recovery with the caution that's come in and the nervousness and the volatility that's come in the last week, we're seeing investors climbing into gold. However, when one looks at the gold miners long term, one should remain cautious because the earnings for gold miners are very dependent on a very soft rand in terms of 870. So it's really a combination. We need to see a prolonged gold price strength as well as a softer rand.